Let's go.
Hello, everyone, and welcome to Zephyr's Adjusted for Risk podcast from the shores of Lake Tahoe. You know, it's very clear that the advancements in AI is placing a renewed emphasis on the importance of data. While that demand for data is also resulting in an increase in demand for energy. Well, I have on the perfect guest who's an industry expert in energy to talk about this and what the future looks like for investing in energy. It's a conversation that I'm very excited for, and it's going to be a good one that I know our audience is going to enjoy. But first, today's episode is sponsored by the award-winning Zephyr, which helps investment professionals make more informed investment decisions on behalf of their clients. I would like to give a very warm welcome to Rob Thummel. Rob is a senior portfolio manager at Tortoise Capital. Rob, thank you so much for coming on the show. It's an honor to have you on. Like I said, it's going to be an exciting conversation. Really looking forward to it. Can you please tell us a little bit more about yourself and Tortoise Capital?
Sure, Ryan. Thanks. Nice to meet you as well, and nice to meet everybody who's listening. So, I'm Rob Thummel. I have been investing in the energy sector for 3 decades, 30 years, 20 years at Tortoise. So, Tortoise Capital, for those of you that don't know us, we're located in Kansas City. We're about a $9 billion, a little over $9 billion asset manager. And frankly, all we've done for my entire career is focused on energy and the energy sector. And we really like the energy sector. Often people say, why did you just focus on the energy sector? Why is that the only thing that you've done? It's because the energy sector is so critical. It's so important. It's a lot of people don't realize, and it's frankly really underappreciated, that energy's in everything we do. That cup of coffee that you just drank out of, obviously, these airwaves, the computer, everything in your lives is impacted by energy, and specifically, most recently, and historically and prospectively, oil and gas plays just such an important role in providing low cost, low in some cases, in that the case of natural gas, low carbon energy as well. And that's what we do at Tortoise. We focus on the energy sector. We offer investment products through closed-end funds, open-end funds, active ETFs, as well as a few passive ETFs as well, and separately managed accounts.
Yeah, interesting. I'm really glad you brought that up because I think people forget. They often talk about, energy and oil and, like you said, gas, but electricity. What would we do without electricity? We would not be talking right now, right? So it's
Yeah.
very important. But I don't think people necessarily, maybe they do, think about it as an investment opportunity and energy. So why you talked about the importance of energy and why it's in our everyday lives, but why invest in it?
Yeah. So a lot of people, most of the time you think about energy, you mentioned it exactly right. You think about driving your car or heating your home, and that's it. But the energy sector is so much more than that. There's so many more opportunities. And I've said, I think that right now is one of the greatest opportunities to be looking at investing in the energy sector, really in my career, because of a lot of reasons. But one of the reasons is what you just said, Ryan. It's electricity. And from our perspective, we think that electricity is going to become the new oil. And the energy sector is evolving. And it's not about oil as much. Oil is still relevant, it's still important. But the future is about electricity. Electricity becomes the new oil, and natural gas and nuclear are going to be those primary fuel supply sources that generate the electricity going forward. And so you say, are there investment opportunities? Yes, there are significant investment opportunities because you can invest in the energy sector in a variety of ways. You can invest in the oil and gas producers. Those tend to have more volatile cash flows. We invest in those in a little bit, but we tend to shy away from commodity sensitive investments. We tend to like more investments where there's fee-based cash flows, there's long-term contracts, and steady, predictable cash flows. You find that in energy infrastructure. A lot of energy infrastructure pipelines. You've never heard about them. You never see them. A lot of the names you've never heard about. But the U.S. has the largest pipeline network in the world. And all of these companies are, generally speaking, are available to be invested in through publicly traded stocks. And the great thing about those type of investments, they offer high dividend yields, high income. So people looking for income, look at energy infrastructure. It's a great place to play. But the new evolving way that's really exciting, and this is why at Tortoise we think this is one of the best times ever to be looking at the energy sector, is AI and the need for electricity. You mentioned it right off the top, Ryan. So for the first time in my 30-year career, the technology sector and the energy sector are really interlocked. The success of AI and new AI applications is really going to be contingent upon, obviously, the technology, and we're doing a great job there.
Hmm.
Just as importantly, you're going to need the energy, the electricity, because these data
Yeah.
centers are really critical for these AI applications going forward. And so that's what we're really excited about the sector going forward.
Yeah. You a lot to unpack there. We're going to talk about AI and the demand there and what the impact is on energy. But let's go back. What I really want to touch on where you mentioned about commodities, right? You don't really necessarily invest in the commodities of energy, but the names that you don't necessarily know that have that predictable cash flow, which is important. I feel as if a lot of people, when they talk about investing in energy, it's commodities, oil, maybe futures contracts and stuff like that. It's interesting that you're firm and you take a different approach to that.
Yeah, yeah, you're exactly right, and I think that's why the energy sector is probably underappreciated and underinvested because a lot of investors just take a position on commodity and the oil price, and then they either decide, hey, we're in or we're out. Right now, I think a lot of people think that oil prices are going down. I'd agree with them, but that doesn't mean you shouldn't invest in energy. In fact,
Yeah.
I think that's a reason to invest in energy because, especially the way we look at things, because what energy does offer is income. And so income is a great
Yeah.
way. And you can get a lot of income from the energy sector, not just current income, but growth in that income. And I think, obviously, in an environment that we're in today, I think, well, in any environment, I think
Yeah.
investment for income is a great way. And then, of course, the growth element. There is a growth element to the energy sector. Energy demand goes up every year. It's gone up 40 out of the last 42 years. There's not a lot of other sectors that can say that, but
Yeah.
energy can. And we're going to set records in the US and globally for energy demand next year, and then that record will be broken the following year, and that cycle will just continue. So that's the way we approach things. I think there's some really good opportunities beyond just the commodity, income and growth as well.
Yeah. Interesting. So let's keep talking about the investing in energy. Let's talk, as a financial advisor, you see the benefits of energy. What does it look like in their client's investment portfolio? Do you look at it as maybe like an alternative? Do you look at, like you said, growth and income? What part of does an investment portfolio does it play in? What's its role?
Yeah. No, that's a good question. So as we talk to advisors, and I spend a lot of time running around the country talking to different financial advisors, we see we see the allocation go into a variety of buckets. So first of all, big picture, the energy sector is a little less than 5% of the S&P 500. So some people will just use our fund, which has less volatility than what's in the S&P 500, but as an energy allocation,
Okay.
5% up to 5% allocation. A lot of people like the income, and so they'll use it as an income allocation basically, and overweight maybe the S&P because they like a lot of people listening to this or have clients looking for higher income from equity securities, and we can see sometimes that can raise the allocation up to 10% potentially because of the income
Mm.
component. Infrastructure is another way. Structure these pipelines and energy infrastructure assets are classic infrastructure investments in terms of long lived in nature, high fee based cash flows, long duration contracts, really strong counterparties. And so that will also be a bucket that people will use. And then of course with AI, now it's a thematic. So if you're an advisor and you have thematics,
Yeah.
some thematic allocation as part of your alternative strategy, this is a great way, and energy infrastructure and AI infrastructure are great ways to allocate to some thematic approach that you might be taking.
Yeah. Fantastic, Rob. Going along with those line, I always promote buy and hold, long term investor, invest for the long term. Time in the market, you're going to lose. But what do you tell those financial advisors who say energy, it's more of a cyclical play or more, maybe defensive? What do you tell them that they want to use it more thematically, maybe, and just for different market cycles versus the long term?
Well, I do think it's so energy is a vast sector to invest in. So I think that you make some great points, and your advisors do as well. So you have to think about you do have to look at the financial cycle, the commodity cycle. But what we try to do at Tortoise is, first of all, we've managed through lots of those. We've managed through financial cycles of obviously the financial crisis, obviously COVID when energy demand declined a lot, right? We've managed through commodity cycles when oil prices have been zero and oil prices have been 150. That said, you know that's why we from our approach we're looking more at volume, right? So we think that what you want to focus on from the energy perspective is just the energy demand. And are you investing in companies that are really going to benefit from that steady increase in energy demand? Because, like I said, what I do know, generally speaking, and history would tell you, the fact is energy demand is going to go up. It's going to continue to go up. It's going to go up every single year. And what I also feel very confident in, and this is always subject to debate, but I feel very confident in it, that oil, natural gas, other hydrocarbons in the US are going to be the primary energy supply sources into the future. So the hydrocarbons have represented over 80% of the global energy supply really for the last 30, 40, 50 years. It's going to be that way for the next 30, 40, 50 years as well. And so a lot of people say to me, "You're just an oil and gas guy." And the answer to that is no. We do invest in a lot of oil and gas and the infrastructure associated with that. But the reason why is because at Tortoise, we look at all energy technologies. And what we've found is that oil and gas, and natural gas in particular, is the most economic, most efficient, and most affordable form of energy. So if economies are going to grow, you need low cost energy. And
Yeah.
what provides that? Natural gas. And so that's why we're really excited about the future, because we've got a bunch of oil and gas in the US, a bunch of natural gas. It's low cost. It can really help drive the US economy as well as the global economy into the future. And that's the reason you might want to invest in the sector.
Yeah. We've talked a lot about energy already in just 15 minutes. And my thought, I keep going back to, and it goes back to Tortoise just focusing on energy. That's your bread and butter. That's where you got like yourself, subject matter experts. To me, it's such a complex area with subsectors and the sector versus just going to a large asset management firm that maybe dabble in energy. Here's an energy product, right, to cover our basis, but not total experts in it like you guys. So focusing on energy as your sole strategy is very important in this space, I would think.
Yeah, no, it is. No, that's, and I appreciate you saying that, Ryan. But you're exactly right. So most people, when they get an allocation to energy, you get an allocation to Exxon or Chevron or through the XLE, and that's okay. They're not
Yeah.
bad companies, and I'm not saying that those are bad allocations. But what I think is important to understand is the energy sector is so much more than just Exxon and Chevron. And what you get when you invest in the XLE, in a lot of cases, is the old way of the old guard of energy, and you get the old approach, and you get a lot of the commodity price exposure. So if you're looking for commodity price exposure, that's fine. But what I'm trying to emphasize is, look, the energy sector is evolving, it's changing, and there are a lot of opportunities outside of the old way, outside of oil. And so what we've done with a lot of our active ETFs like TNGY is we look forward. Where's the puck going? In energy. And what we see, where's the puck going? It's going to electricity. As I mentioned, electricity is going to become the new oil. You're going to need fuel supply sources. Natural gas. Natural gas. We like natural gas for so many reasons.
Okay.
We like the electrification theme. And longer term, we're going to like nuclear as well. So that's the difference. Is you really, as a specialty manager and a focused, dedicated manager of the sector, we look for these trends. Where's the puck going? Not where the puck has been. And so that's really what we try to offer advisors, and hopefully get some exposure to their clients that way.
Yeah, I love a conversation that references hockey and Wayne Gretzky and it's a good conversation. Let's talk about AI. You mentioned it and electricity. AI is evolving at the speed of light. It's like in the adoption of AI. We talked earlier about the importance on data and data centers. And with that comes a critical need of energy. Can the current energy infrastructure support that demand? And that demand that can, like you said, is only going to increase, and that's some of the trends that you're talking about. Can the energy infrastructure handle it?
But we're going to need more. No doubt about that. We're going to need more electricity infrastructure, energy infrastructure. There's just a lot of investment that's going to be made. And that's going to be a good thing for the companies that we invest in. But you're right. If you go back and look historically, the facts are that electricity demand in the US has been flat for 20 years. And
Yeah.
there's been investment, but there hasn't been really much expansion in the US electricity grid in the last couple decades. Now, we're just entering what I'll call the age of electricity, if you want to call it that. A lot of people call it that. It's frankly, what that means is electricity demand is going to grow, and it's going to grow significantly over the next several decades. A lot of forecasts done by us and McKinsey, other more well-respected entities think that electricity demand will grow by 75% over the next between now and 2050. So it's going to be steady, consistent electricity growth. But along with that, you're going to need to expand the U.S. electricity grid, more generation facilities, more transmission lines, more substations, more natural gas turbines, more natural gas pipelines. So yeah, we're going to expand the network out and grow it pretty dramatically over the next couple decades. But once again, for us as investors, that's an opportunity. That's an
Yeah.
opportunity to invest capital, earn a rate of return on that capital, and then turn around and pay that rate of return back to the shareholders in the form of current dividends and increasing dividends as well.
Yeah, sounds like a fantastic opportunity with the growth there, and it's all driven by technology and AI. How can it financial advisors, we've talked about financial advisors and incorporating energy in a portfolio, but how can they take advantage of this increase in demand for energy due to AI? The energy AI place demand on energy.
Yeah, yeah. So we think it's going to come about in two ways. First of all, electricity. So at Tortoise, we have an active ETF. The ticker symbol is TPZ, and it focuses on two core themes. It focuses on rising energy exports. So what a lot of people don't realize is the U.S. is the largest energy producer in the world and the largest energy exporter in the world. And oh, by the way, we're going to export more and more energy over the next several decades, right? We
Yeah.
just got deals where Europe is going to buy $750 billion more of energy starting next year. South Korea, 100 billion over the next 5 years after. So anyway, exports are going to increase, but also then electricity demand is going to increase. And all of this investment that we were just talking about is going to be done by these publicly traded companies that we're identifying. But there's other opportunities we think as well, because what we think is with AI, a lot of advisors have done great allocating to NVIDIA, Microsoft, Amazon, Google, great investments, all mega tech, had fantastic runs, benefit from AI. All of them do. But AI doesn't just run on chips alone. It
Yeah.
runs on infrastructure. So there's a lot of infrastructure that's out there. And so we have a fund, the ticker symbol's TCAI. We just launched it. It's the Tortoise AI Infrastructure Fund. And it focuses on the electricity increases, the need for more natural gas turbines, and all the stuff we were just talking about, but also the data centers themselves, because
Okay.
electricity is the new oil, but data is just as important as well. You need this data to run all these great AI applications that you and I are, and everybody else that's listening use every day. So you need data centers, and then you need inside those data centers, you need data storage devices, you need network switches, you need fiber optic cable, you need air conditioning. So there's just a
Yeah.
lot of really underappreciated infrastructure opportunities that really drive AI that really are underrepresented in investor portfolios, in my opinion, based on the people we talk to.
Rob, that's a fantastic point. Like you said, everyone talks about, oh, I got my exposure to AI through, like you said, NVIDIA, all these chip companies. But that infrastructure to produce, to run AI in the data centers, I talked to a lot of folks on the real estate side talking about how, they love the data center investment opportunities because of AI. So a lot of different ways to gain exposure to AI versus just those magnificent seven and chip makers. You talked earlier about the energy sector being very broad, right? And it's more than just oil and natural gas. You've talked about some of the different opportunities. What is your approach to locating the best opportunities within those different subsectors, when it is so broad? And what are the best opportunities you think going forward in the energy sector?
Yeah, so it's deep research. So we've got a team. So my a fellow portfolio manager and I have worked together for over 20 years. All of us got a lot of industry experience, obviously, and seen this sector really evolve, and the energy sector has really become a really critical sector, and really a sector that the U.S. can take advantage of, because we now are energy independent, and that just has
Yeah.
significant ramifications on a positive way, both geopolitically, socially, economically. And then we've got some great analysts too. We got a team of analysts, 4 analysts that are doing great work
Okay.
for us every day. And it just, you really have to roll up your sleeves. It's a complex industry,
Yeah.
but experience matters, dedication matters, living through it matters. And so that's really what we focus on every day. We've been early on in a couple things. Natural gas, I think we were early on. Have identified themes periodically throughout Tortoise. And number one was the U.S. shale theme. And so today everybody's like, oh yeah, shale. Yeah, everybody knew about that. Shale technology back in 2000, 2002 was not necessarily, actually wasn't even around.
Okay.
So we invested early on the shale technology theme, but more importantly, where were going to be the key plays. Not many people knew about the Permian Basin at the time.
Yeah.
Not many people knew about the Bakken Shale or the Marcellus Shale. But so we identified the companies that were drilling there, but also building the infrastructure, because those were the most important places to be, because that was where the growth was going to be, and the steady growth. And that now today the Bakken has become one of the, or sorry, the Permian has become one of the most prolific oil and gas basins in the world, and we own all the infrastructure around it. But we're doing the same thing. We did the same thing with liquefied natural gas. The
Okay.
liquefied natural gas has basically become its own industry in less than 10 years, it seems. We identified that very early on and found companies like Cheniere Energy, that's the largest exporter of energy, of liquefied natural gas in the U.S., and we're early investors in that company as well. And now, like I said, the LNG industry in the U.S. has grown dramatically. The U.S. is the largest exporter in the world, and there's significant growth opportunities there. We see similar opportunities now in this AI infrastructure play. If
Okay.
the U.S. is going to be
Yep.
AI, maintain its AI dominance, you're going to need to build data centers. You're going to need to build infrastructure
Yep.
to power the data centers. You're going to need to obviously keep the data centers cooled and the data stored, and all the things that need to happen to run the data centers inside those data centers as well. So that's how we take the approach. We look for these long-lived assets, really critical, essential assets, and then obviously we take concentrated bets in those.
Fantastic. And we haven't even talked about, we were talking about, you mentioned how complex this sector is. We haven't even mentioned the impact, politics, geopolitics has on the sector too, right? And that's for a whole nother conversation. We'll talk about that some other day, but it is very complex. It's not just talking about, looking at financial statements. So it's a good thing you got a deep team of analysts with a lot of expertise in it. Lastly, it is a big sector, a lot of different ways. If I'm a financial advisor, to me, I would rather maybe take a broad approach to it, take a broad approach, just get, instead of taking subsector bets, what's one way financial advisors can gain exposure to the broad energy sector just to get exposure to it, bring those opportunities into a client
Yeah.
portfolio?
Yeah. Oh, yeah. So Tortoise, we have, like I mentioned earlier, several active ETFs, but one of them, TNGY, gives you access to all the entire energy sector. And we identify where we think the best opportunities
Okay.
are in the energy sector broadly, everything from oil and gas producing to the midstream side, to energy technologies, to electricity. And obviously, we capture all those in a portfolio, 30 to 35, maybe 40 stocks,
Okay.
and offer that as a complement, I guess, to an energy allocation for investors as well. So that's probably the easiest way. We have dedicated and specific focus. If you like energy infrastructure, our flagship fund, TORIX, has been around for
Okay.
a long time. It was one of the first, I think it was actually the first open-end fund focused on just infrastructure, and it's got a nice dividend yield tied to it, and the dividend grows a little bit every year. And then, like I mentioned earlier, we've got some new offerings as well with exposure to areas outside of energy infrastructure in particular, but to electrification, to
Okay.
AI infrastructure as well.
Rob, I knew it was going to be a fascinating conversation. You brought a ton of great insight. I love that. I learned a lot. I think our audience is too, on a sector that's complex, but a lot of opportunities within it. Thank you so much, Rob, for coming on the show. It was an honor. Where can our listeners get more information about Tortoise Capital?
Sure. If you just go to our website, tortoisecapital.com, we've got a lot of great insights that we try to put out, and we try to educate people and advisors in general. And of course, we're always welcome for advice if you want to get in touch with us, or if you have ideas that you want us to that you're and questions that you have. We're more than happy to help as you and be your educator and teach people more about what's going on in the energy sector.
Fantastic. It may come as a surprise to some, but I actually prep a little bit before these conversations. I went to your website. You're exactly right. You have a lot of great education. For people that listen to the podcast, know I'm big on education and helping educate, whether it's financial advisors, the investors, or anyone, on different investment concepts. So you guys do a great job there. I read a lot of great content, good stuff. Thank you, everyone, for listening to this episode of Zephyr's Adjusted for Risk podcast. You can watch all of our other podcasts on the Zephyr YouTube channel as well as on Spotify. Please be sure to like and subscribe to those channels and follow us on LinkedIn. Thank you very much and have a great rest of your week.